As you finish up your tax returns and hopefully get that refund, it's time to focus on your own bottom line. Now consider this. A recent University of Michigan survey showed that more than a quarter of Americans have no confidence they can retire comfortably. Scott Puritz from Rebalance IRA joins us now with some tips for what to do with that refund. April 15th, obviously the deadline for taxes to be filed, Scott, but it's also another important deadline. Tell us about that.
Well, Jessica, it's obviously the deadline for funding your retirement accounts for the previous year, for 2012. And what surveys show is consistently people underfund the retirement accounts.
So it's the deadline for getting a tax break on those retirement accounts?
Correct, for the previous years.
Yeah.
If you have not funded your IRA or retirement account for 2012, you have until April 15th to do that funding.
So a lot of people don't feel like they're in the best of spots for retirement in the future for good reasons. We've been through a tough time financially the last couple of years. Cash flow is a problem, but they need to focus on their future. What concepts should they keep in mind when they're looking at retirement accounts?
Well, you know, at our firm, Rebalance IRA, Jessica, we believe that there's never been a better time for individual investors to invest with the sophistication and prudence of the large institutions. We've come up with three very simple guidelines to help everyday investors. First, pay attention to fees. Keep your fees low. We often hear, well, you know, what's the big deal about fees? Well, 1% of extra fees can eat up over 20% of your retirement returns in less than 10 years. That's a big number.
That's a really big number. You also say think globally. Why is that?
Well, it's not uncommon to think that people are diversified if they have a basket of U.S. stocks. Well, think how much the global economy has changed over the last 20 years. Research concludes very strongly that a prudent investment fund should be U.S. and international. So we recommend that folks have at least half of their stocks outside the U.S. in the major split between the major markets of Europe and Japan and the emerging markets of China, Brazil, India to capture that growth.
We've got about a minute left. You also say don't be scared of stocks. The last couple of years have been scary, not so much this year. Why should we embrace stocks, Scott?
I tell you, Jessica, that's the number one issue we run into. We've all been a bit traumatized by the crisis over the last few years. But if you're investing for your retirement account and your time frame is more than 10 years, research concludes that you're going to be better in stocks than bonds from a return point of view. And keep in mind, interest rates are at historic lows and inflation's coming back, and stocks are the best protection against inflation.
You've given us a lot of food for thought, Scott, and people at home should know the average refund this year is running about $3,000, so that's some good money to stock away. Thanks so much for coming in.
Thank you, Jessica. My pleasure.
And I'm going to send it over to Howard with a look at a forecast that's pretty nice.